Good morning and welcome to video 3 in our series of multiple streams of income. And this video we are going to talk about dividend income. Now in video 1 we covered earned income, which is having a limited company, paying yourself and having the benefits of earning an income from your business as if you were an employee of your company. The second video we looked at profit income. Now profit income is where you are selling something, a product or a service, and you get the income after all the expenses and the taxes are taken out. You are able to pay yourself the profit that is left. So this time we are actually going to look at dividend income. And I'm going to start with dividends from business because the first two videos were about business, and we will carry on with the business model to start with in this video. So dividends. Now, if you have a business that is a separate entity, and in the UK it's limited companies, limited is recognised in quite a few countries, I think use the same scheme, then you as the owner or one of the owners of the company can opt to take dividends each year from the profit that the company has. So you can pay yourself a dividend. Some people pay themselves dividends and then put them back into the business. There's all tax connotations with that, and you need to talk to an accountant to explain what is applicable within your country and within the business model that you're operating. But if you own a company, you can pay yourself a dividend. Now it's up to you how often you pay that dividend. Some people pay it monthly to themselves, some people might just pay an annual dividend. I was reading an article recently about Amancio Ortega. Now, he is the owner of Intuity. Intuity is a company that is listed on the share market. It is a holding company, and it owns a lot of companies that are trading and come under the umbrella of Intuity. And some of the companies are like Zara. I think most people know the clothing chain Zara. There's about 14, 15 companies that I'm aware of that come under that brand. Now, Amancio Ortega paid himself a dividend of $4 billion last year. Now, hey, wouldn't we all like to be able to pay ourselves $4 billion. But that shows you a type of income that you can pay yourself from a business. So anything or any time you have a business that is seen as a separate entity, you can pay yourself a dividend from that business. So another type of dividend income is shares. Now, we teach strategies to our clients to have monthly and quarterly dividends coming from companies. Now, there are quite a few companies that will pay a dividend monthly. They are set up specifically to pay their shareholders a monthly dividend because they're called monthly income dividend companies. So what happens is that every month you get a dividend for each share that you hold. Now it's only a very small dividend, but obviously the more shares you hold, the bigger the dividend that is going to come in. Then you have companies that pay you quarterly dividends. So that means every 3 months you have a dividend coming in. And we actually teach our clients to look at companies that they need 3 quarterly companies that will be paying them a dividend, and it works out that it's staggered, so they get a dividend every month of one of the 3 companies. And other companies pay you 6 monthly or pay you annually. So every time you buy a share in a company that is paying a dividend, as long as you own those shares by the date that the company goes ex-dividend, you will receive the income each time the dividend is paid. And one of the strategies we use with our clients is that they get income coming in every month from their shares. And we build the portfolio up so that every month there is income coming in. And once they build that income to a certain level, and it doesn't need to be big income, it can be 100 a month or 200 a month in income coming in, then what we do is we take 25% of that dividend, we keep that as cash for ourselves, and we reinvest 75% of the dividend. That means that we are reinvesting the money back into more shares, so that each month we are growing the income that we earn off our dividends, or the dividend income that is coming in, and we give ourselves a pay rise every month because we've got more dividend income coming in each month, and we just keep 25% of it and reinvest 75%. So that is dividend income. That comes from your shares. And another type of dividend income is actually off bonds. Now, bonds can be classed as interest or dividend. It depends how you buy them. So if you were to buy bonds that are on the share market, so you're buying through a share market, then I class that as a dividend income because you're purchasing like a share. And so you know you've got income coming in twice a year with your bond, and that is a type of dividend income. I know it's for a specific period, but because it's been purchased on the share market, I treat that as a dividend income. Other types of bonds I treat as interest income because they qualify under the way they're purchased, they qualify as interest, and I will cover those in another video. So 3 types of dividend income that you yourself can generate. So 1, you can be the owner of a company that is listed on the share market, and you can receive dividends from it. You can be the owner of a private company, and you receive dividends from it. You can be the owner of shares and receive dividends. So it's dividend income, and you can get dividend income from bonds. So as you can see within the videos that you have been watching within the series, there are multiple ways to make money within each of the multiple streams of income. So we have multiple streams of income. One size doesn't fit everyone. So whatever type of income you are looking at, dividend income forms part of that, but how you earn that income, that dividend income, is up to you. So have a look at your portfolio, how you're generating your income, and remember that we've now talked about earned income and different ways to bring that in. We have talked about profit income, and now we have covered dividend income. That's three of your 8 types of income that you can bring in. And it's spreading those 8 types of income and having something from each of the categories that will help you survive and thrive in any economic situation. So start looking at how you can generate those dividend incomes.